Hey everybody, so it is April 2023. So it's going to be a crazy month for me. Baby's on the way, but I want to give you an update of what's going on with the market. So general census is that the market is stable with a hint of good. Rates right now are about 6%. We're seeing good movement, things coming around. There's still a low amount of inventory. So let's kind of hop in and see what's going on. Buyer demand versus rate environment. Obviously, as we know, as rates tick up, buyer demand seems to drop. But with the SVB bank collapse and Signature Bank, it actually brought rates down. Rates right now are looking about 6%, give or take. And they still are open to lending. They haven't constricted lending, which I thought may be the case after the regional banks were in some trouble. But they really kind of held through. We'll see what commercial space does with regional lending, regional banks, but we'll figure that out. Sam Cantor, chief economist, Freddie Mac, said turbulence in the financial market is putting significant downward pressure on rates, which should benefit borrowers in the short term. Absolutely. People are pulling their money out of 10-year treasury, so that is bringing the rates down. Also, the spread from the 10-year treasury from what it was a few months ago to what it is today is also lower. In March, we were looking at probably about 7.5% in the beginning of March. Now we're at about 6%. So that's a pretty good jump, of dropping down from there. One of the things that I always caution, one of the big reasons why we do this is to tell you, don't listen to the news. You're seeing headlines, prices are going to drop 20%, there's this problem, there's that problem, demand isn't there. In other parts of the country, I do think we're going to see a lot more weakness than what we saw here. Like my example is Florida. Florida probably doubled in pricing. I do think they'll get hit a little bit more than we will. I think some of those pricing there doesn't make sense. The new condo laws that were put in place for money in reserves is going to have a bigger impact on the overall market in Florida, which may create some opportunities for us. It may create where you're selling up north and then you're going to buy down south. That may create some buying opportunities where, when rates were 3%, everything was just bananas. So don't get too caught up on what you hear on the news. You have questions, feel free to reach out. But right now, we still are in a stable market. What's interesting when we look at year-over-year appreciation, we are seeing different changes for different areas. The market shifted of June 2022. We're, almost a year later from that now. And we're seeing some of these changes where we were seeing 5 to 10% above market value before for no matter what the property was. Now we're probably seeing about 5% market value if the property is renovated. And if the property needs work, you may see 5 to 10% decline off of market value based on the comparables. So give you an idea, New York was 5.2% growth year over year as a metro area, with the U.S. national average is 3.8%. So we're doing a little better than that national average. Like I said, the amount nationally that we are down from our peak is about 2.6%. I don't think in our area, maybe we have that, maybe we don't. I think we saw this up, come down a little bit, bounce, and I think we are starting as the spring market is coming in to kind of come back. So I wouldn't be surprised if we do test some of those pricing levels that we saw back at the peak of 2022. One thing to keep in mind that, we are in a better position than, say, Middle America with pricing and, holding on to some of that stability is because our incomes in the Northeast generally are more than people out west. What we've seen really in the Northeast, it's almost even from the medium income to the qualifying income that's there. Where you see in the West, it's a big difference. You have to qualify, much higher based on the interest rates and the pricing, and the income has not caught up to it. In the Northeast, it's 92 versus 103, where out West, it's 99 versus 127. It's a very big disparity going out West, probably that California market and things like that. So one of the things that people ask all the time, are we seeing those foreclosures? In New York, it does take a long time to see a foreclosure, and we are not seeing that. The lending practices over the last, 3, 4, 5 years have been relatively solid. They've gotten a little looser with the pandemic, QM mortgages, getting more creative, but with that type of stuff, they want larger amounts down. You are seeing some interest rate, hits for lower credit or not as much money down. Mortgage insurance, even though it did come down a little bit on the FHA side, it is kind of ramping up a little bit. We'll see where that goes. But the lending standards have really stayed in place overall. So when we look at it, I got a few charts for you of the Southern Westchester area and the North Bronx. So we're probably seeing that, overall closed sales is down about 28%. I think our inventory level is down about 20%, and that makes a big difference. That is a big reason why prices have put a floor underneath it or continue to rise depending on the property. That inventory is still very low, and we're seeing that kind of throughout the area push forward. We are seeing probably about an average, like I said, about 5%, 6% of price appreciation from a year ago this quarter. So the spring's going to be interesting. You know, if you're looking to sell your home, it is still a good time. You are still getting good values. There is still strong demand. We just listed a few properties in the last couple of weeks. Went highest and best. We had 11 offers on each. So we're definitely seeing that, you know, happen there. On the buy side, it's tough sometimes when there's not a lot of inventory out there. But if you're a solid buyer, you know, and we go through, we look through, you know, what you're putting down, what your terms are going to be, how to present you in the best light, you know, we're getting deals done. You know, we've closed well over 100 and something deals in the first quarter of the year, and we're excited to kind of see that go through. So as the year progresses, we're going to see more and more things happen. And, you know, definitely important that you make sure either if you're selling the property to get it together, if you're buying to make sure that you're in your best light, and who you work with matters more now than ever. So any questions, feel free to reach out. We can hop on a Zoom, a call, and we can go over things.